Well, so first of all, thank you to everyone who is watching this now, and also those who are going to watch this as a recorded message to you. Really important message that we have for you today. First of all, let's start with something a little bit different. That is, this past weekend, we're recording this on a Tuesday, and this past weekend was the class of '83's 40th homecoming. And congratulations to that class. We have one member of that class that's joining us today, and Bill Yeager, and I got to see Bill a little bit. But we had a lot of our class on campus. The class of '84 was on campus this past weekend too. And before we hit the record button, we were just enjoying some memories from that weekend. It was a wonderful time for people from this class to engage. We had a couple of special opportunities for us to engage, and we're going to have so many more next year. So it was a good foreshadowing of the fun that we're all going to have in about 12 months. So those of you that did join us there, wonderful to see you again. And those of you who aren't, start making your plans, even though we don't have a date yet. Start making your plans, because none of us are going to want to miss next year. Turning the program over towards the topic of our fundraising. One of the topics that is very important in this activity is legacy giving. And Bill's going to talk to us a little bit about that today. And, we started this campaign really about 2 years out from our 40th reunion. And for some people who may think that's just a long time to be talking about this, it really is. But today's topic is why we have to start early. The idea of leaving a legacy gift takes a while to come to that conclusion. It requires a lot of conversations among families, making sure that everybody understands exactly what the decision is and hopefully are in agreement with that decision. It also takes and can take a lot of time working with the family's advisors, especially their legal support. Generally, a decent will and some trust documents may take a couple of months. As I've shared before, a couple of years ago, we had some legislation that would have created changes to the rules affecting legacy giving. And suddenly what you wanted to get done in 2 months was now taking 6 months. So we never know when that's going to happen, and that time frame may be lengthened. So it's a good time to start talking about these things early. Legacy giving and other types of planned giving have been a huge part of our campaign so far. They will be over the next 14 months as we continue the campaign. So let's learn a little bit about it. Bill, I'll turn it over to you.
Thank you very much, Mark. I really appreciate it. For those of you that don't know me, I'm Bill Yeager, class of 1983 from the Citadel. I am the Senior Director for Legacy and Class Campaign Giving here at the Citadel Foundation. And I am now actually in my 19th year here at the foundation. Best job in the whole world. I really enjoy it. And everybody looks at my hair and say, when are you going to retire? And I really have no retirement plans anytime soon. So what I want to do today is take a little bit of time to kind of go through legacy giving with you and what it involves and what it entails, and give you a few details about it. And I think the first thing I want to do, though, is be a little bit lighthearted with it in that there's a lot of things that go into legacy giving. I love this cartoon, and I want to make a promise to you guys that if you do, or when you do a legacy give, I will not be calling to see how you're doing. Okay. So, but I love this cartoon. It's a great little plain giving thing. So what is a legacy gift? I like this definition. It's kind of the integration of your personal, financial, and estate planning, and with your goals for your lifetime, and maybe testamentary charitable giving. In other words, it's when we all sit down, us, your advisors, you and your family, and we talk about what you'd like to do, not just for the Citadel, but also for your church and other institutions that you might be charitable with. And we know that the Citadel is not the only charity that people support. So all of these things that I'm about to talk about today you can use with any of the people that you support charitably. We just hope that Citadel is one of those things that's in there. So what is a legacy gift? Well, the big thing is the legacy gift is going to come from principal. It's not really a gift like your annual gift that comes from income. Sometimes it takes some significant planning and time to complete, as Mark mentioned when he introduced us to this. It could be an outright gift of a complex asset. And there's several different types of assets that are kind of considered complex, and we'll get into that here in a little bit. It might be deferred. It might be a little while before the Citadel actually receives the funds, but it is something that eventually the gift comes to the Citadel. And it's usually just for individuals. Most corporate, well, really, there's no corporation or anything that can do anything like a legacy gift. But as a business owner, and I want to stress that if you are a business owner, there is a way that you could take advantage of legacy giving in your charitable giving, and we'll talk about that. The other thing that a legacy gift does is it can solve some challenges that you might have. You can minimize income and estate taxes, minimize gift and generation skipping taxes. And a lot of people, aren't worried about estate taxes right now. And Eddie Terrell is a financial advisor. He can tell you this, that, a husband and a wife right now have about $23 million that keeps them below the need to worry about estate taxes. But in 2025, that's going to go down. And that whole law sunsets, and the number that we're seeing now is anywhere from $3 million to $5 million might be what the legislature settles on, which means it in a combined estate for two-person estate, anything over $3 to $5 million could be subject to estate taxes. So it is something that we all need to start thinking about that is liable to really start having an impact. Because as you know, a little bit of real estate and a little bit of assets, it doesn't take long to get over $5 million. So the other thing is we can help increase your retirement income stream or even your before retirement income stream with a legacy gift. We can provide financial security and or educational dollars for other people in your family for down the road. And the other thing we can do is help keep assets in your family so that they stay with your family and they don't go to the government, which most people that I speak with, that is very important to them. Okay, so these deferred gifts that I talked about, one of the things that we look at is a will or trust, just a testamentary gift. And this is the most common type of legacy gift out there. It is a will bequest or something like that you do where you leave money in your will to the Citadel Foundation or a charity. And this is the most common type of legacy gift that we've got. Still 85 to 90% of all legacy gifts in this country right now, whether it's to hospitals, churches, higher ed, or whatever it is, comes from a will bequest. It can also be done via a beneficiary designation, whether that's life insurance, retirement plan, a transfer on death or pay on death from a checking account or some other type of investment account, or from a life income plan. That would be like a charitable meter trust, charitable gift annuity, which we'll talk more on those details here in a little bit. Let's talk about wills and trusts right now. I think the most important thing that I want to get to you in this whole presentation right now is if you are, especially where we are at this point in our lives, if you do not have a will or you do not have an estate plan, whether you are charitably minded or not, I urge you to go get it. And I think Eddie would agree with me on that especially in the state of South Carolina, if you die without a will or intestate, as it's called, the state decides what happens to your assets. So everyone needs to have a will, especially if you have children, you own property, or you have any amount of assets whatsoever. Now, most will bequests can be stated as either a set amount of money, or it can be as a percentage of an estate. It can be a residual of an estate, but it's just something that you have to include in your will or trust, and an attorney has to help you do that. Okay. You can also name a charity as a beneficiary in a IRA, 401k, 403b, deferred comp account, something like that. And most of the time, the custodians of those types of accounts want you to use a percentage vice a set amount there, because the balance of those go up and down, and it just makes it easier for them. Another way I mentioned was life insurance. And this is something that we really talk to our younger alumni about a lot. As you guys know, at our age, the cost of life insurance is rising pretty quickly now, every single year. But if you do have an existing life insurance policy that you feel like your family doesn't need anymore, or you don't need anymore to protect your family, a great way to utilize that life insurance is to use it as for a charitable gift. And all it takes there is to name the Citadel, get a change of beneficiary form from your financial advisor, and name the Citadel Foundation or any other charity as the beneficiary of that life insurance policy. And you can do a percentage of it. You can do the whole thing. And it would then, once you pass, that amount of money comes to the Citadel Foundation for whatever you designate. Another thing that you can do, if you've got the assets and stuff to do that right now with the cost of insurance for us, is to buy a new policy. You name us the owner and the beneficiary. If you do change us as the owner of the beneficiary, also, or owner of the policy along with the beneficiary, then there could be a charitable benefit to that, because the premium payment, you can make that premium payment to us as a charitable contribution, and then we send it on to the insurance company. And so you can deduct, if you're able to itemize your deductions, you can deduct that insurance premium, and then we make the insurance payment for you. Okay. If there's any questions, I meant to mention this before. If anybody has any questions as we're going through this, just put them in the comments. I think Christine's keeping an eye on those, and we'll get to those later on. Simple assets can be used for legacy gifts: cash, savings bonds, CDs. I don't know if anybody has savings bonds or CDs anymore, but there is a way to use those. It can be a little complicated with the savings bonds, but it can be done. And probably the best way to do it is with securities, highly appreciated securities. And that's the next thing I'm going to talk about. This is the second thing. If you get nothing else out of this discussion, pay attention to this, because everything that we want to do with legacy giving is make sure you're being tax wise with your charitable contributions. And so a lot of folks, they decide to make a contribution to a class campaign or something like that, and they say, well, I'll write a check for $10,000. I'll give you $10,000, and they write a check. And if you do that, you do get a 100% deduction on that, as long as you're inside your charitable limits for that $10,000. But what I always ask people to do is to look at if they've got any highly appreciated stock. If you do have highly appreciated stock, then you can do what's called a transfer of those shares of stock directly to the Citadel Foundation. Okay. That way, the Citadel Foundation is liquidating those shares of stock, not you. Therefore, you avoid the capital gains taxes on that money that you give to us, and you still get the full deduction for it. In other words, let's say you want to make that $10,000 contribution with Walmart stock, and you've got some that you may have paid $3,000 for, so you've got a $7,000 capital gain. You send us that $10,000 worth of Walmart stock, you get the deduction for the $10,000. We liquidate the stock. We don't have to pay the capital gains, and you don't have to pay them either. And then what you do, if you didn't want to get rid of those shares of Walmart stock in your brokerage account, you write the $10,000 check to your broker. He goes out and buys that $10,000 worth of Walmart stock at the price that we just sold it at, and you replace those shares at a higher cost basis. So now you're going to have less of a capital gain down the road when you liquidate those shares of stock anyway. So it's just again, we want to help you avoid taxes as much as we can. and also allow you to be charitable to us. Any questions on that? Again, let Christine know and we'll answer them at the end. You can also make legacy gifts and contributions to Citadel with complex assets like real estate. There's a thing called a life interest or a life estate reserve. Make an outright gift to real estate. Closely held stock if you're owner of a business, and we'll talk about that. Again, you can avoid a lot of capital gains that you might have looking at doing the closely held stock or the ownership in a business. Tangible personal property, boats, art collections, baseball card collections, anything that's got a value where there's a market out there is something that you can use as a charitable gift. And there's also other things too. Okay. Again, you've got to give us some heads up about that. Those aren't things that can be done very quickly. And that's why we say, as soon as you can, let us know if there's something like that that you want to use to make your charitable gift. Let's talk about a life estate reserve. The example that I use all the time is a vacation home. We've got a lot of folks that have a house in the mountains or a house at the beach or something that they're not sure what's going to happen with that when they pass away. Maybe the kids don't want it, or they want the kids to not have it, one way or the other. And so what you can do is you can gift that property right now to a charity, okay? But you retain the right to use the piece of property or live in it for the rest of your life. You get a current tax benefit. In other words, we do an appraisal. You get a tax deduction for the value of that gift. If it exceeds your annual deduction limits, that can be carried forward for another 5 years after the date of the gift. You agree to maintain, insure, and pay taxes on the property. And then once you're done using that, in other words, when you pass, then the property is ours, and then we go ahead and liquidate it. And you can see an example here with this. This piece of property is the building on it, or the home, is $425,000. The land's worth about $175,000. So it's a $600,000 property that is valued right now. If there's a capital gain in that, which there almost always is, then you avoid the capital gains taxes by giving that to us. You agree to maintain it and everything. You get a $600,000 charitable income tax deduction, or the deduction's $416 in this example. And then, which could save you over $100,000 in taxes. And then once the 2 lives are over and and since it's already been transferred to us, we would liquidate that and then use those proceeds from that property for anything that you guys want to designate it to use it for. And we have done a couple of these here at the foundation, and they work very well. And it helps out tax wise. It allows people to make a bigger commitment to the school and really have an impact. And like I said, they work very well. Let's talk about life income plans. And these are a way that you can give assets to the Citadel, or put them in a trust, or do a life income annuity with those, and you get a tax deduction, you get income for the rest of your life. And then at the end, some money comes to the Citadel Foundation to be used for, again, whatever you designate it for. Charitable gift annuity is basically the easiest life income gift to establish. It's a contract between you and the Citadel Foundation. Okay, you give us a certain amount of assets, whether it's cash, piece of real estate, or whatever. Again, that real estate or stock shares or whatever, you give it directly to us. You avoid the capital gains because we are the ones that liquidate it. Then we put those assets into that annuity. You get a fixed annuity for the rest of your lives, you and a spouse. And the annuity, that percentage is based on your age at the time of the gift. And then at the end of that, whatever's left in that annuity account when you pass away and don't need the income anymore, it comes to the school to be used for whatever you designate it for. And here's an example of what it looks like. We've got We've got a piece of property, whether it's stock or a home or whatever, that's valued at $200,000. It had the cost basis to 40. So you've got a gain of $160,000. You gift that property and bypass the gain. You could save over $4,000 in capital gains taxes. You get a tax deduction for that gift that can save you a little over $11,000. If the annuity amount is 5%, you're going to get 5% a year or $10,000 on that $200,000. And some of that is going to be tax-free because it's considered a return of principal. And then at the end of that time period, when you've passed away, whatever's left in that annuity account comes to the charity. Very easy, clean way to do things. And again, the income that you receive, the amount of the annuity is based on your age. Okay, and this is a fixed annuity. Another vehicle is a charitable remainder trust. The difference between the charitable remainder trust and the charitable gift annuity is normally an attorney has to draw up a charitable remainder trust. But in the same way the gift annuity works, you bypass capital gain, you can increase your income, you get a tax deduction, and the remainder in that trust goes to charity. There's a couple different types of charitable remainder trust, and I'm not going to get into all those details today. But the IRS says that a charitable remainder trust has to have a payout of at least 5% in order for you to take a charitable deduction from that charitable gift. And there's a big calculation that's done, and I'm not going to get into those details either. But it's a great way to make a gift and get some income for the rest of your life. There's also one sort of a charitable remainder trust called a charitable remainder unit trust that has some inflation protection built into it, so that the amount of income you get can go up a little bit based on the value of the money that's in the trust and investment gains and things like that. And if you're interested in something like this, let me know, and we can certainly sit down and talk the details with you. This is an example on how it works. Same $200,000 piece of property and everything. You can see that the numbers are a little bit different with this because this payout that I've got right here is 6% that we set up, so that everything's a little bit different number wise from the annuity. And but again, just like the gift annuity, whatever's left in that, the amount here goes to the charity and for whatever you guys designated for. Now let's talk about your cash goal for your campaign, which I believe is a scholarship, right? Class 84 scholarship. And
That's right.
Yes.
Yeah.
Yep.
Okay. So there's a couple things. The first one here really doesn't pertain to you guys. And there isn't a whole lot of people that say this to you these days, but you're too young to take advantage of the IRA charitable rollover right now. That's something, once you turn 70.5, it's something that's available to you that you can use to make commitments. So 10 years from now, or probably about 8 years from now, when we're getting ready to talk to you guys about your 50th class campaign, and I will probably still be here, we'll talk about IRA charitable rollovers, okay? Another thing is a bargain sale or a sale in unit trust. We'll talk about that. And then there's another type of trust called a lead trust, and we're going to talk about a couple of different types of those. And I don't want to go into a whole lot of details on these because it would take too long, but I just want to give you an idea of what they are, and it is something, a vehicle that can be used to make charitable commitments to your charities. I'm not going to go into this, but again, the government allows $100,000 per year if you're 70.5 to be to roll directly from an IRA into a charity. And if you're over the age of 74, whatever that rollover is, it can be used to satisfy your required minimum distribution. Okay. So again, we'll get into those details later on. Let's talk about a charitable lead trust. These are kind of the opposite of a charitable remainder trust. You transfer property and assets into the trust, and the earnings from that trust, there's a certain amount of money that comes out of that trust each year to the charity. And then at the end of the term of that trust, the principal in that trust gets transferred to your family members. Okay. The assets continue to appreciate during that charitable period, but it's a way that you can make a commitment to a charity for a set number of years and move the tax deduction for that charitable commitment all the way up to the front of the trust. And we'll talk about that here in a second. You can see here that we look at a property value here of $1 million, and it could be stock, it could be a bonus that you receive or something like that. And you see the way the numbers look here. And then you set the term of years for 15 years. So 6%. So for 15 years, $60,000 per year gets paid out. So this is a $900,000 commitment to the charity, which again, you get that tax deduction up front. And then the $1.2 million in the trust here passes on to your family. And the great thing about these lead trusts is there is no generation skipping taxes that you have to pay on these, because and I'm not sure how many folks are aware of this, but if you give over a certain amount of money to grandchildren, then you have to pay taxes on that money. Okay. So, but again, we can get into those details later. Now, a grantor lead trust, and this is a great way for somebody that gets a big bonus or has a windfall from the sale of a business or something like that. You can accelerate a tax deduction up to the first year, provide a source of income to the Citadel for your project, and really any kind of asset can be used. Again, the way it works is if you are the grantor, that money is transferred into this trust. If it's a 5% trust in this example, $50,000 a year comes out for 5 years, it's $250,000. And then at the end of the term of years with the grantor lead trust, those assets are transferred back to you. Okay. So you're basically letting somebody use your money, a certain amount of your money, a percentage of that money over a certain period of time, and then it comes back to you. Okay. A little bit more detail, takes a little bit to get these set up, but it's a great way to do it. So if you've got classmates that maybe get paid a large bonus or sells a business or has a large windfall of money, it's a great thing to share with them, and I'd be happy to talk to them about it. So that's kind of the end of this thing. What I'd like to do is just run through, give you guys an idea of what vehicles are out there, what kind of assets that can be used and stuff. Christina, was there any questions through the thing?
No questions. Just some folks chiming in when they had to hop off, but no questions yet. So feel free to jump in if you're here.
Eddie, do you have anything you'd like to add to what I said?
Yeah, I appreciate it. First, it's great to see some classmates on here. Welcome. A long time since we've seen some of you. You'll hear, if you listen to this or watch it, Mark mentioned we had a pretty good pre-reunion last weekend at homecoming, and the school was kind enough to host a little reception for us in the new Bastion Hall. So really excited about where we're going to be in a little less than 12 months. I was just going to share one point of what myself, my wife and I, and some other classmates have done. And by the way, Mark Blackwell and I are both financial advisors. We're not recommending anything, from a compliance standpoint, but we're a resource if you have questions. And there's a number of lawyers that are on the committee that help us out with this. And if I can just share the screen just real quick, Christine, I just want to just show you how easy it is to do the.
Yeah, sure. Go right ahead, Eddie. I think you should be able to, but let me know if you should have access to share.
Yeah, just real quick.
Yep.
First thing I just want to reiterate to Bill, if you have not done your estate planning, you have not revisited it or updated it in years, it's a perfect time to do it. No matter what you do, the purpose of this call is not to solicit donations, it's to help you understand how you can and multiple options if you choose to do so. But I cannot overemphasize enough. We recently had a Board of Visitors member y'all all probably read about that passed away very suddenly at 47. And it's just another example of like, man, your estate planning is so critical. And here's the reason: you don't do it for yourself. You do it for the people that are going to have to take care of you if you're incapacitated or have to settle everything, upon your passing. So, life insurance is one of the ways that you can give charitably to the Citadel Foundation, to your church, to your charities, hospitals, whatever is important to you. And for the Citadel Foundation, it's pretty simple. This is called a Declaration of Future Intent. It's one page. You fill it in. I mean, you can do it in 5 minutes or less, and then you sign it. And then that's the first step. You're designating, saying, I'm going to give X amount of an asset or my estate or life insurance or some type of bequest, retirement account. And then the second thing, if you choose insurance or an IRA or something with your will, you just need to make sure the beneficiary change form is handled, or the process, with the insurance company, with the investment company. And it's pretty straightforward. Now, the foundation makes a big deal out of it, and we're very thankful for that. I always remind them, we got to die before you get it. So that's one way to do it with your estate, with insurance. If you got on the call late, please go back and watch Bill's PowerPoint presentation. There are multiple ways to make gifts from a tax standpoint that are advantageous in your lifetime. And some of them are real complicated, and some are pretty straightforward, like this. But again, Mark and I are happy to be a resource if you got questions, but I would point you directly to Bill and the foundation staff. They're well schooled in this. We've done other, we did something for Tally Cole-Claser a couple of years ago, along with his wife. And there's lots of opportunities to give and lots of different ways to do it. Especially my favorite, other than the life insurance, is appreciated stock. Some of our classmates work for large corporations, had stock options, RSUs, grants, etc. And if you do a little bit of planning, you can take advantage of that, and then nobody pays any taxes on it, and it's a great way to donate. Thank you, Bill.
All right, thank you, Eddie.
sharing
Appreciate
that.
it.
And Eddie, I'll just highlight, if you don't mind me adding, that this is how, if you're okay with me saying this, you made a contribution to your class campaign, using I think it was a gift of insurance. So I think that's just worth noting. It's your kind of area of expertise, but also something you've done too. So thank you for that.
Yeah, and I'd used a portion of an IRA that I've got to make my legacy gift. Designated for a scholarship here at the school. So it's a very easy thing to do. The other thing that I want to close saying this, I think more than any other kind of gift that we have here at the Citadel Foundation, I think legacy gifts are more a gift from the family than just from the graduate. And so I urge everyone to have a discussion with your family about these gifts and what you're going to do, why you're going to do it, so that everybody understands what's going to happen, whether it's a gift that comes while you're living, or whether it's a testamentary gift, or whether it's a deferred gift that isn't going to happen till after you pass. That's important. We've had my favorite story is a guy from one of our 50th class campaigns a couple of years ago, went and changed his will, did not tell us he was not informing his family or anything. We sent the thank you letter that we always send to families that make a legacy gift. And he came home from work one day and his wife was holding the letter in her hand. And she said, "What the hell is this?" And I got a meek little phone call a couple of days later, and he said, "Hey, Bill, I'm going to have to change my will back." And that doesn't do anybody any good at all. So that I always tell people that to please discuss this with your family and let them know what you're doing and why you're doing it. And most families, I think, we're all Citadel folks, and most families understand our attachment to this place and why we're doing this. So and that's all I have for you folks. Thank you very much.
Bill, it's a great reminder. We have had at least one classmate. There may be more that I'm not aware of, but we have had at least one that had an intention And his wife had a different intention, and there was a negotiated settlement that was reached. And
Those negotiations can take time too, so.
that's right. Thank
That's
everybody.
right.
I wanted to also say, Eddie, thank you for covering the statement of intent. Another real life story in our campaign. We had a classmate who had designated through his advisors a gift, a legacy gift to the school, but had never notified the school. And so by receiving our videos and the emails and all the contact we provided, thanks to Christine, it reminded him, I really ought to contact the school and let them know that I've already made this designation. And it came in during the campaign and therefore counts towards our campaign. So you may have done something already, just not taken that final step of letting the school know. And, please do let us know. Contact Bill, contact Christine, me, Mark Stevens, anybody you feel comfortable with. Let's just get it notified to the school. So wonderful information, Bill. But one thing I wanted to, Bill mentioned this, but just didn't want it to go by. Our class campaign has a $500,000 scholarship. When you're doing legacy gifts, you can designate where that gift is, how it's going to be spent at the school. You can designate our scholarship or another scholarship you haven't. You may actually create a scholarship in addition to ours if you choose to. It may go to the Spiliotis Endowed Chair or some other endowment that you want to do. There's not a limitation. So if you're making a gift to this, the Citadel, you probably already know this, but I just wanted to put a fine point on it. You can direct how those dollars are to be spent within reason. From my experience, I would say you want to give the institution, and we tried to do this in developing our scholarship, you want to give the institution as much discretion as possible, because you can't possibly foresee the needs, 30 or 40 or 50 years down the road, which may be the time that they're spending some of your gift. So you want to give them discretion, but you can put parameters and reasonable recommendations around how your gifts are expended. And just one more plug for the class of 1984 scholarship.
Yeah. Thanks for that, Mark. And I'll make two really quick points along the line of that declaration of future intent document that Eddie, thank you for sharing that. Just a note that if, hopefully a conversation will come of this, but if you use that form yourself, we really encourage people to put the Citadel Foundation, keep it broad in your either beneficiary or will, other documentation, and then use that DFI form to be more specific about where you want the funds to go, because that's not a legally binding document. You can change that easily at any time. If you put a fund in your will, for example, you might have to go back through your attorney to make that adjustment should you change your mind about where you want the money to go on campus. So that can just a helpful tip to keep it more broad in your actual